Hey everyone, Brian here. Welcome to Unearned Inc. I saw this article the other day and really thought it was appropriate for our channel to cover it a little bit. If you've watched my other YouTube video, I did a video a long time ago on Groundfloor. I'm actually slowly pulling money out of Groundfloor because I just feel the investment is not as compelling as it used to be. But just to give you kind of a recap of that video and what this is about, Groundfloor, Yieldstreet, all of these are like crowd-funded real estate platforms. So, their value prop is, hey, you can invest in single-family homes, you can invest in apartment complexes, strip malls, industrial parks, anything like that. And you can do it all from the comfort of your own home with one click. And one of the challenges is, when you're investing is always trying to think about the opportunity cost of, yes, you want to achieve some diversification in your portfolio, but you don't want to over diversify or over complicate things just for the sake of saying like, oh, I'm in real estate deals. I own 1/10 of 1% of an apartment complex in Arizona. And so these guys, they kind of know their target market. There's typically a lot of high earning people, think of software engineers, people in tech, doctors, lawyers. That's kind of their target market for a lot of these companies. There's Fundrise, Yieldstreet, Groundfloor. And this was a good one from CNBC where most recently Yieldstreet has gotten into a little trouble and they're starting to interview people who are just not getting the return on investment that they thought they would get. This one says investing like the 1%, when investing like the 1% fails. And it just goes into a couple of things that they've explored and found out about this particular company. So this guy, Justin Klish, he stumbled upon an ad for Yieldstreet back in 22. And that was their pitch, right? Invest like the 1%, where you can, have partial ownership in apartments and all kinds of investment property. The 46-year-old financial services worker living in Miami, he invested 400,000 in two real estate projects. So he had a luxury apartment building in downtown Nashville, and then there was a three-building renovation in the Chelsea neighborhood of New York. So Yieldstreet, not only could you get into deals that were like more like landlording, where you just collect, you get a partial, a fraction of the rent payment each month or each quarter, however the deal was structured. But they also did like fix and flip, where they go in and whether you're flipping an apartment or flipping single family homes. I know, like I tried a couple of deals on Groundfloor. It was very similar, where you invest in a couple of deals and then you get a check at the end of the renovation once they put the home back on the market. In this example, 3 years later, Klish said he has little hope of ever seeing his money again, wiping out 300,000 of his funds. The Chelsea deal needs to raise fresh capital to avoid a similar fate. So it's pretty impressive that, again, they know their market, right? These are high earners where I would feel very uncomfortable putting 300, 400,000 in Yieldstreet or Groundfloor or some of these other ones. Now, would I put 400,000 in Fidelity or E-Trade or Robinhood and put it in SPY or an ETF like VTI? I would absolutely do that in a heartbeat as compared to these are deals where you're sitting in, one city and with the click of a mouse, you're putting 300K in an apartment complex in, 1,000 miles away. You've never seen the property. You have, maybe you have a photo or you go on Google and Google Street or Maps and try to find what it looks like. But a lot of these deals, you're putting 100% of your trust in the Yieldstreet managers to kind of make those investments, and you're reading a prospectus or something else to kind of make your mouse click and say, okay, I'm going to put my money on this. So it's pretty impressive that they have a lot of high net worth people that are doing this. And like I said, I dabbled in Groundfloor, nowhere near this level of money. But now you're starting to see like where some of these guys are kind of struggling, where you could have just kept your money in much safer assets and got a bigger return. Klish, who typically put in at least 10,000 in each for projects vetted by Yieldstreet managers. So if he was normally doing $10,000 investments, he must have saw something very compelling to put 300, 400,000 in these two particular projects. but unfortunately, it looks like it came back to bite them. They talk about, dozens of investor letters were sent to customers. They talk about some of the projects, which this is pretty interesting, right? So just like Yieldstreet, Groundfloor plays in these same markets, Fundrise, a number of them. Some of them have a little bit different strategy. I know Fundrise is more like kind of a hedge fund where you give them your money and they really don't want you to take your money out with, until like 5 years later minimum. I don't know how Yieldstreet is in particular, but I know like Groundfloor, for example, one of the nice things about Groundfloor is like you can invest in a single property. So you could say, I want to invest in this property on 521 Main Street in, Knoxville, Tennessee, or whatever it is. So you have a physical address where if you want to get in your car and actually go visit the property, you can do that. Some of these are not as transparent depending on where they're investing. But what is interesting is the cities, right? Atlanta, Dallas, Nashville, Tennessee. I believe Groundfloor is based in Atlanta, so they do a lot of deals. And it sounds like Yieldstreet, they're all hitting the same markets. Florida is always a hot market. Obviously, Georgia and mainly Atlanta and the surrounding area, and North Carolina definitely is another hot area. But here's the thing, whether, if you live in, say, Oregon, whether you're, living down the street and you're driving around on Saturday and Sunday looking for deals, you're subject to the same market dynamics that these big guys, BlackRock, Yieldstreet, everyone else who's trying to invest in those same markets. Now, again, commercial is obviously a little bit different than residential, but whether you're doing, commercial or residential deals, the market is the market in these cities. So when the market goes bad, whether it's going bad on the residential side or on the commercial side, everyone's impacted, whether you're the individual investor trying to do it on your own, whether you join one of these real estate clubs in your local cities where, you pay 30,000 to get into the real estate club and then they go invest your money in one of these apartment deals, or you're saying, hey, you know what? I just want to sit home because I work 60 hours a week as a software engineer. I don't have time to be driving around trying to find the best deals. Let these guys do it for me. But obviously, when you give up that control, it's highly risky. And so, you can see here, Yieldstreet's overall returns in real estate have plunged in the past 2 years. The category went from 9.4% annual return in 2023 to 2% return rate in the company's most recent update on its website. So can you imagine you can get 4% in a high yield savings account, but instead, you're going to go to Yieldstreet, put a ton of money in, um, give your name, phone number, address. Sometimes you got to upload your driver's license and all this nonsense, only to get 2%, which it just makes no sense, right? It's like, no, let me just go to Robinhood. Let me go to M1, pick your favorite brokerage, Public, any of them, all of them are getting more and more reputable and better as the years go by. And you're going to get a lot more than 2%, right? So, I think there's just still that allure that real estate, it sounds cool, right? Oh, I own, like I said, I own partial investment in this condo that's, in downtown Miami Beach, right? And so like people look for these things, not, more for diversity is one thing, diversification is one thing, but I think it's also somewhat of an ego play as well, which sometimes can bite you in the butt. Um, Weird stuff here that Yieldstreet was even in the shipping industry or shipping. Uh, they did a deal with BlackRock in early 2020. They announced a partnership with BlackRock, biggest asset manager in the world, obviously. The month after its public announcement, Yieldstreet had tougher news to share. They had loans backed by commercial ships that are torn apart for scrap metal, and these would suffer losses. Yieldstreet lost track of 13 ships in international waters that backed 89 million in member loans, according to an April 2020 lawsuit. So these guys, they were doing all types of exotic investments, and it sounds cool because you're like, hey, I make a lot of money, I make six figures, but I'm investing in the same deals that someone who's worth 6 billion investing in, and at the end of the day, they're not, right. It's not the case. I think it even mentioned somewhere in this article that most of the time these deals that, Groundfloor gets, Yieldstreet gets, they're getting like the B, C, and D deals, right? They're not the really good deals. BlackRock has already scooped those up, right? The big guys have already scooped up the best deals, and then this crap that you see on these, Fundrise, Yieldstreet, some of these other platforms, it's kind of not the A1, type of investment deals, and they unfortunately, they see you coming and get your money. So I think there was another article in here, or another case they did. This just shows you a little bit about their portfolio. Obviously, real estate made up the most, 424 million. They did crypto. I think you could even invest in art. I think there's another platform. Sometimes they ping me through email. I think they got my name from somewhere, and you can invest in art. Like you'll have a fractional share ownership in some famous artwork, and then when it sells again, hopefully you can cash out. But these aren't things like you can trade like ETFs through Robinhood or anything else. So, it's just kind of real shaky. Like I said, diversification just to be more exotic. Sometimes it's not worth the hassle, and you can just put your money in SPY and call it a day. Um, what else did they talk about? I think there was something in here late 2022. Yieldstreet even told investors the real estate was safer haven and a safer haven asset. They gave an example of Altera Apartments, a multifamily project in Tucson, Arizona. Um, but this year, Yieldstreet told investors the 23 million deal at Tucson development was in technical default. Here's another one. Mark Underhill, 57-year-old software engineer, said he invested 600,000 across 22 Yieldstreet funds. Of those deals, he's probably going to face 200,000 in losses. And this is kind of where, like I said earlier, watch the ground floor video that I did. If you choose to kind of do some of these investments, I kind of walk through how I would vet some of these investments. But even when I kind of joined that particular investment site, what you find like the first year or two, you were making really good return on investment. You may be getting 10%, 11%, 12%. And then I noticed as the years went on and they added more properties, they expanded, they got more managers to kind of look at the deals that were happening in other cities, the quality started to go down, and it just becomes a game of numbers, right? The more investments you make, it's very hard to say every single deal that you do, you're going to get the 10%, the 12%. What happens is you get one or two bad deals in default, and your average just kind of starts to crater. And so, like I said, when I started out with Groundfloor, I was probably in the 12%. I think when I last looked, my overall portfolio had fallen down to like 7 or 8%. So then you say, okay, is it worth me being in Groundfloor? And I was like 50 plus deals, right? Because again, I'm doing small lots. I'm doing a 500 investment here, $1,000 investment here. And so you got hundreds of these deals, and they like manage 100 deals or keep your eye on that many deals, and you're pulling in 8%. It's like that's kind of why I've made the shift to say, you know what, I can do better just putting that money in the stock market, and probably still get 8%, if not more, if you just put your money on Nvidia and call it a day. But like I said, I think it's something that you have to kind of try it out to see if it fits you. And for some, some may still do it. I think it will be a very small part of my portfolio going forward. So that's it. They talk a little bit about another person, 61-year-old electrical engineer. Again, these are highly paid people that are targeted for a lot of these, click of the mouse real estate deals. Put 480,000 into Yieldstreet funds. He said 3 of those projects have defaulted. Yeah, it's over time, the percent of projects, you come in and do a couple of deals and you're like, hey, I'm 100%, zero default. And then a year or two later, you look and that it starts to creep up. It's like 5% of your deals are defaulting, 10%, 15%, 20% of your deals are defaulting. It's just like everything else. It becomes this game of numbers, but it's very hard to really kind of get 20, 30, 40%. And if you're going to stay down in the single digits or low double digits, I always say weigh the opportunity costs. So really, that's the end of the article. I'm gonna hop over and just show you another one because another reason why this article really got my attention is because you may have seen this commercial on CNBC. So it's called Roots or Invest with Roots. Same thing here, where this is a brand new fund, or at least they've started doing a lot more advertising. But I'm going to play a little bit of the commercial for you.
So I said to him, "No, Nigel, not without the brie."
Indubitably.
And you are?
Oh, don't worry. I'm basically one of you now.
How did you get in here? This soiree is for fancy real estate investors only.
Okay, but I am a real estate investor.
But where's your vaguely British accent?
Yes, the accent a person gets from years of generational wealth.
I actually didn't grow up wealthy. In fact, I still rent. I rent and invest through Roots. It's the first real estate investment fund that builds wealth for investors and residents.
Do I have to rent to invest?
No, anyone can invest through Roots for as little as $100.
Oh, so the same as the price of a gallon of milk.
No, definitely not the price of milk.
I meant human milk.
So again, they're kind of pitching this thing like, hey, you could be in these great deals, you know, multifamily, high-rise condos in Miami. Again, I haven't spent a whole lot of time on this one. But then the kicker is like, oh, you know, just for $100, you can get into some of these deals and you own, you know, 0.00001% of 1/10 of whatever. That's kind of your ownership in these particular deals.
Before Roots, I was living paycheck to paycheck. Yoink? Did you have to say yoink? While I was struggling to get ahead, my savings account just sat there, doing nothing, gaining 0.4% interest. I could gain more interest from my cat. Hey, Mr. Flatpat. Hey, Mr. Flatpat. Look, no. Come on. I thought I had to be like super rich to be able to grow my own money. Or take volatile risks like investing cryptocurrency.
I lost my yacht to crypto.
Roots gives people like me the ability to participate in the real estate market, all while
And ironically, you know, if you notice, Ethereum now is probably going to cross 5,000. I am not surprised at this point that Ethereum probably will go to 10,000, to be honest. And Bitcoin's still doing really well. So you still see these commercials where people are kind of poo-pooing on crypto. But really, at the end of the day, the real estate deals seem to be more sketchy than the crypto deals.
having a bigger impact on my wallet and the community.
I know real estate, and you won't be able to touch those returns for years. Even then, it all depends on selling and refinancing.
I mean, you probably have to wait years to withdraw your investment, but with Roots, I have liquidity options. I can withdraw part or all of my investment every 3 months. And yeah, now I say things like investment and liquidity. And since I love watching my investment grow, I'm not going to take my money out yet, but it's nice knowing I can.
Yes, I hate being told I can't do something. We'll see about that.
And I feel good about my investment knowing that Roots is looking out for the people renting their properties. People like me.
Wait, renters are people?
You're totally blowing my mind right now.
And instead of paying a security deposit, they can make an investment. And they can get rebates for simply paying their rent on time. They can gain equity and even make a profit for simply taking care of their home. What?
So again, I'll stop it there. I didn't realize this is the long version. There's a 30-second version like they play on CNBC for the commercial. This is kind of the full one, but you get the idea. Again, I'm not endorsing, or recommending any of these in particular, but always do your due diligence. If you're interested in this one in particular, learn more about it. The website is investwithroots.com. That's investwithroots.com. Again, Yieldstreet is yieldstreet.com. You can just do a Google search and you'll find a lot of these, online real estate investing platforms. In prep for kind of doing this video, interestingly enough, like this one's not even popping in the Google results yet. But like I said, they are doing a lot more commercials. So I imagine, it's just another way to skin this cat. I say, buyer beware, just kind of, always compare your stuff, your investments to what you can get just doing a simple SPY or VTI ETF through your brokerage. If you want to play around with 1%, 5% of your portfolio, your money in one of these, it's not the end of the world. But I really appreciate Yieldstreet's article or CNBC's article on Yieldstreet, because you haven't heard a lot about, are people really making more money in these vehicles versus just having a brokerage account and doing stocks and REITs that way. Doing a simple REIT, doing realty income, you may make more money that way than in some of these deals. But we're going to end it here. Good luck investing as always. One quick shout out. Go check out our new site. We have a site for apparel. It's called Stock Ticker Tees, like stock ticker. So that's stock, STOCK, Stock Ticker Tees, and that's TEES.com. StockTickerTees.com. Maybe you find a shirt that you like of one of your favorite tech companies or ETFs. And bye for next time. Good luck trading.